Hi, this is Mark with your analysis for the week commencing the 14th of April. 2 weeks ago we had a very easy week. Many of the pre-planned trades worked to the pip and everything looked rosy in the garden for Forex trading. However, last Sunday I cautioned that things were likely to be more tricky, and they certainly were last week, except for the longer term moves. And I have been going on about this now for 6 months. And a lot of this depends on your mentality. Are you trading Forex for the fun of it, for the buzz of it? You like to be in there every day, trading, taking trades, doing your analysis, etc. Or are you in this to make money? And personally, I'm in the latter group. I've done my time. I've spent thousands of hours and 10, 12-hour days sitting in front of charts. I'd far rather make money just simply trading from weekly, if at all possible, and certainly daily. And this is the Aussie dollar on a weekly. Those of you who've been with us for a while know that we've traded this all of last year. And the reason why we were taking trades at this point, 78.6 fib on a weekly chart that goes back to 2011, 2012 when this move started. And I have now had 9 out of 10 positive trades out of this from weekly analysis. And I've shown you in advance why I intended to short there and the reasons why I was longing when we were down here. And you can see here how price, for a recap for those of you new, how price came up and stopped at each fib on the way up and then bounced off on the way down. We then had a period of consolidation, moves along. But these fibs have been extremely important, and which is why I was saying last week that I was looking to short at 105.70. 10 pips beyond it went, and where did it close? Almost 100 pips below. That was a predictable move. Now, in the past, we've had 103.680 has been an area for shorts. So previously, last year, price broke through on a weekly, closed below the all-important line. The very next candle pulled up, and where did it go? It went short, and you could have shorted here. And then a few months ago, we were looking at longing at 10200, and we were certainly looking not to short here until we got a clear break and close below. So this has been highly significant, and therefore I am going to look to take this trade again. No guarantee it's going to win, but at the end of the day it's actually worked 10 out of 10, but I got taken out on this one a while ago because my stop was too close. The nice thing about this trade though, that as all the way along you've only needed small stops, and it's been very predictable. Another clue here that the Aussie dollar was going to turn down, I showed you last week, keep your eye on gold. And if you noticed gold last week, gold broke a major trend line and started to tumble back down. And therefore, as price came up to the 105 on the daily, it should have given you more confirmation, 105.80 rather, that it was likely to turn back down again. So, for the week ahead, I am interested to short the Aussie dollar here. I am interested to long it here. And if we get a major breakdown following gold, I will look for reasons to long back down here. For me, that is my main trade of the week. This is just to show you what happened during the week. We had the move up. This then was Thursday's complete indecision candle when price went through the 105.70. We stopped just above the recent high up here. And where did it stop on the way back down? Well, clearly at 105. Now, I did have a loss earlier in the week. I looked to short at 105.100. And this is what I mean about the longer time frames are more profitable for me, less stressful and stronger. And that's what you're looking for, is the strongest areas of support and resistance. If you're going to trade this intraday, then yes, look for potential bounces along here. And if price breaks and closes below 105.100, then you can start considering looking for shorts and pullbacks down here. But as I said earlier, my preferred area is all the way down here for a long and back up here for a potential short. Now, I had a few people asking me about gold. The press have been talking this weekend about gold prices going to collapse, and it's a dreadful pullback and all the rest of it. I think that's absolute tosh. I think what's going on here at the moment is that the big guys want the little guys to sell and to panic and gold to plummet because they're going to pile in and buy more. The logic at the moment seems to be that everybody is going to the US dollar for the safe haven. That is absolute hogwash. The US economy is 16 trillion in debt. I think the interest alone is 300 billion per week on their outstanding debt. They are printing money at an alarming rate. They are buying back $85 billion of their own debt. every month, and yet they've had the audacity this weekend to warn the Japanese for doing exactly the same. The world is madness. The options you've got: do you want your money in US dollars? I do not want anything in US dollars. Do you want it in euros? No, I do not. No pounds. So the options for physical cash, if you need to have cash, Aussie dollar seems a good bet to me, but my preferred way of protecting my wealth is in gold and silver. And if this tumbles, I don't care, because it will go back up, because eventually common sense has to come into the world and say that all the major currencies are screwed. So if you're looking to buy, what do? Well, you can keep watching and hoping it's going to drop even further, and for that you start looking across at major areas of support and resistance. So we've stopped at one here from April 2011. It may get down here to 1300, which is 2010's low, but whichever way, you can either be buying on the way down. The danger is you try to catch the bottom of this move and it could rocket and go back the other way. Personally, I'm heavily into silver. I bought more last week when we came down to 2600, and again, this is a major area of support and resistance. Silver is highly manipulated. J. Morgan Stanley are frequently fined for cheating in this market. They make that much money, they don't care, they just pay the fine. But the difference between gold and silver is actually needed in industrial production. So they can play around with it, and there's more traded every day than some days than actually exists on the planet. But for me, I continue to buy silver. That is a personal action. That is not a recommendation for you. You need to do your own analysis, make your own decisions, and you need strong stomachs to be involved in precious metals. I do not trade them with Forex because the leverage kills you, and I have blown up too many accounts in the past trying to catch moves in gold and silver. This is the euro USD. This current monthly candle, if it was to close like this, would suggest a move back up. I personally am just very, very wary with the euro and the pound at the moment. I said last week you could be looking for potential bottoms and tops, but really I'm far more interested in shorting. If we get back up here up to 133, I would be interested to short, and I'll keep my eye out for a potential long at 12900. We're getting a 5-8 cross. Stochastics may be about to roll over. We may be on the way up. There is a ton of European news this week and British news, and the difficulty because of this is you really need, if you're trading intraday, to be tiptoeing around all these news announcements. You've got the weekend, we've had the ECOFIN meeting, so we need to see how the market reacts to that. And then as the week goes on, you have lots of big politicians making speeches, which is always a bit of a concern. Tuesday's a big day for the pound with PPI and CPI coming out and HPI, lots of things there. German zoo, and then you've got all this news. And to say, you're just going to have to be very, very careful. The MPC meeting minutes, there's always a chance that somebody's going to rebel, and if that number changes here, that will hit the pound. Personally, I think that the pullback on the pound is just a pullback before a further fall. But you're going to have to watch the news. And then on Friday, we've got G20 meetings and IMF meetings, so that's a definite no trading day for me. So what do you do if you're going to trade it? Personally, I've just shown you, I would wait. 130 will be important for a potential pullback. You see here, for 4 days you had these bounce trades, and bounce trades can be very profitable. So if you're trading intraday, those are the areas to be looking for. To trade bounces, I go down to a 4-hour chart. So here we've got the bottom line. This is mainly the area where price was bouncing last week. And what you do is you look for candlestick formations. I mean, these were no real clues here. This was a reversal, but too far below. But you're looking for candlesticks. Again, pin bar reversal here, but then again, we'd already moved 20 odd pips. And you look for support and resistance, horizontal, diagonal, and EMAs. I personally prefer the Swissy at the moment. Periodically last year I would switch to the Swissy instead of the Euro if I felt that it was clearer what was going on. And what happened with the Swissy in recent weeks, we got the break of this 200, we then got the break of this weekly 55 last week. We broke through, closed marginally below, next candle very indecisive, finally got the move, then you got the pullback on Friday. So this is a weekly 55 EMA. You've got the 200 and the 55 rolling over on the daily, which will get nearer now after this move. That is the area I am most interested for a potential trade. So I am interested to short the Swissy at 93.25. And if you have a look here on the weekly, we had a clear 5-8 cross, stochastics rolling over, 55 EMA is now starting to roll over as well, so I will be interested to short there. British pound did absolutely nothing last week. I was saying the only thing I was going to do with this was wait for London to open and wait to see if we got a clear move in either direction, and we didn't get anything clear. Indecision candle here, even more so. This is a weekly candle here. The price opened and closed to the pip in exactly the same area. Nobody can make their mind up. This is the major line in the sand for me, and therefore once again you need a clear break. Now price bobbled and bounced along. This was Friday's candle. I never trade Fridays anyway, but it's all very, very messy, guys. And if you're going to go for a move up there, which is counter trend at the moment, I would now go for a close above this candle here. So you're wanting a close above 154.00, clear close, then a move up. Personally, I prefer a short on this pair. Longer term move, if I was going to take a half stake bounce back up, and I will be interested on a 4 hour again anywhere around 150-100. But as I said to you earlier, I prefer the Aussie dollar and the Swissy this week. Similarly, the euro pound, I was looking to short 85.20 and had a loss last week. What did it do? It stopped to the pip at this 78.6 fib, and therefore price is now appears to be bouncing between here and here. So again, if you're looking for range trading, that's the area to be looking at. I am interested in this one. Having said all of that, watch the Bollinger Band at the market open. This is a never in a million years Bollinger Band, and it usually signifies when price comes up to it, it will touch it, sometimes spike through, but then will reverse back down. This will get nearer as the days progress. If that carries on to here, then I might have a little tickle as a short, but I would only go half stake on this. I usually double up on a euro pound, but it's been very choppy and very messy. The yens, the dear old yens. I missed I was in an Aussie dollar yen trade last week or the week before. I got taken out by 1 pip and it's now gone 850. You feel like throwing yourself off the window ledge. Be careful here. We kind of warned about not trying to pick tops and bottoms. It would have worked this week if you'd have taken it. It's very risky when all of the world is dumping the yen for you to start getting involved in buying. But there's a lot of profit taking went on, and it all looks so easy in retrospect. But have a look on the weekly candles. This is a weekly dollar yen pin bar reversal candle at the top of a major move. So the ways to play this, personally, I am only interested to long. I now need to move my fibs up to the recent high, and I'm still mainly interested for a pullback all the way back down to 94.50. We've had some major activity. The 55's coming up. It's 61.8. It was previous major support and resistance, and therefore I would be interested there. Intraday, if you're going to trade, be looking for clues to long anywhere around 96.40, 96.50, because once again, previous support and resistance. This is that Aussie dollar yen. I was taken out down here the week before, but I say by 1 pip, and it's gone 800. Again, on the weekly, we have a potential reversal candle after a major move up. I am only interested to long, and I would wait for price to pull back all the way back down to 100, which is hugely significant and is major previous support and resistance. And if we fib it, we've got 61.8 in the area as well. So we've got lots of reasons why we would be interested to long the Aussie dollar yen if we get a pullback down here. And this is from a 4 hour. Again, you could have caught the top on this. As with everything in Forex, it always looks so easy after the event. Yes, reversal candles here. Oh, you should have taken this, and off you go. But it could easily have gone the other way, and you are flying in the face of major activity in the opposite direction. Once again, on this one, the preferred area is 100, as I've just shown you. Again, if you're going to start looking intraday, you start looking for clues, but it's too vague for me at the moment. Euro yen, major move, and again we have a pin bar or a reversal candle on a weekly. And where did it stop to the pip? The monthly 200 EMA. 127.00 is the main area I am interested for a long on this pair. Only be in one yen trade at a time, and at least until you have your stop to entry. There is a lot of news going on, a lot of politicians trying to talk it up and down. The Japanese are trying to weaken it. The Americans are trying to bully them into not weakening it because it makes their economy more, their goods, their finished goods, cheaper, and therefore wanting us to sell more. Finally, the CAD, the dear old CAD. Well, it did it last week. I showed you in Wednesday's update, I showed you a live trade that I was recording with one of my one-to-one clients. 10200 has been major importance in recent weeks. I'm personally still looking for a pullback all the way back down here to 103, 1.0030 area, which is this monthly 55 EMA, which was hugely significant in recent years. And a bit like that Aussie dollar scenario, we had opportunities here back in 2012 on a weekly to short, and again 90% win ratio. We then had a situation here where we were shorting once again, then we were longing. So this was highly significant. 100 is obviously crucial, as parity again is significant, and therefore I will be interested to short at 102, half stake because it's risky, and certainly to long down here. Now, I showed you during the week how I had taken a trade on this on a 4-hour chart. I explained the reasoning behind it. We've gone up to 102. Explained this actually was probably a better move, but I didn't take it because it was so close to the EMAs, therefore the risk-reward ratio wasn't great. But I showed you, have a look back in Wednesday's video, and I showed you why and all the reasoning and how I managed this trade, etc. So CAD potential shorts, as I said, 10200 and longs at 10030. Said at the beginning, you need to make your mind up and decide what kind of trader you are. Are you in this to make money, or are you in this for the buzz? Personally, I've been through that stage, that passed many years ago, and if you can detach yourself emotionally from what's going on and not go looking for the buzz, then you will find that your trading will improve exponentially. Final option, of course, in this Aussie dollar, if it does break and close above here later in the week, then we start looking for potential longs. Keep your eye on gold. If there's a rush and a run on gold, then it is likely to drag the Aussie dollar down. Have a good week.